Silicon Valley Bank, Credit Suisse, the banking crisis, what is going on? But more importantly, how is this going to affect mortgage rates and real estate in 2023? All right, guys, if you have a teenager at home, you're going to get this joke. And if you don't, I apologize in advance. Banks are not bussing right now, fam. And Credit Suisse acting kind of sus. Now, that's a funny meme I recently saw talking about the banking crisis in teenage terms, right? And I couldn't help but add that joke in here. I want to talk to you today, not about that stuff, because I don't want to get into why banking gets into economic trouble and why we're seeing this right now, how the Fed and interest rate hikes play into that, because some of that is speculation, but other parts of that are just for people that study those things, not for little old math and mortgage guy who's just a mortgage broker happen to makes YouTube videos, right? What I want to talk about though, what I follow, how this stuff is going to affect mortgage rates and how that is going to affect the real estate market. So let's start with, where are mortgage rates? As of right now, mid-March, after a wild week of up, down, and sideways, mortgage rates on a 30-year fixed, according to Mortgage News Daily, sit somewhere at like 6.69%. And we saw it from 5.99 in early February go all the way up above 7. Then we saw a dramatic swing down end of last week, the beginning of this week, with the collapse of Silicon Valley Bank and the 10-year Treasury going down 50 basis points. Then we actually saw a couple of like pullbacks and worsenings where it went 7%, 6.5%, up to about 6.7 where it sits as of the recording of this video. But where are rates headed? And next week, March 22nd to be exact, the Fed is going to meet again, and this is going to be an important one. Already, mortgage brokers, real estate agents, consumers who are affected by the market or in the market or paying attention to the market, like the Fed meeting is already marked on their calendar. It is especially marked now because the Fed is going to basically make a decision. Do we hike rates by 50 basis points? Do we hike them by a quarter? Do we press pause? It was Eric Rosengrant. I think he's like a former Boston Fed chair. Had some tweets go out that got some traction where he talked about rates should be paused until the degree of demand destruction gets evaluated. I agree with that sentiment because all of these rate hikes, we're yet to see the full degree of demand destruction, right? We know that increasing interest rates, making capital harder to get, more expensive to borrow, is going to create a pullback in demand, which slows down the economy, which slows down inflation. That's the whole point of all these rate hikes. Slow down the economy, slow down inflation. But we don't know how much impact all this dramatic rate increase has had looking at just today, because some of it takes a little while to weave itself into the economy, weave itself into demand. We shall see if current Fed members agree with that sentiment and they want to pause. Maybe they look at some of the banking collapse and stuff that's going on over there and say, you know what, maybe we've got to tone it down and not continue to pour salt in this wound or gasoline on this fire, whatever analogy you want to use. There's all kinds of good ones, right? Here's a quick layman's explanation of what is likely to happen because of what's going on in banking, right? We all know that people are relatively uneasy about what's going on with banking, and most people don't understand it. but you don't have to understand it fully to be like, you know what, I'm going to pull some of my deposits. And so credit, lending institutions are going to tighten credit if there's a drain on the money, the capital that they currently have, and they're going to lend out less, so they have plenty of reserves sitting on their balance sheet, so they look strong. And so this less lending is going to turn into slower economic activity, which is deflationary. Deflationary means rates are going to come down because rates follow inflation. So, long-winded way of saying that I believe, based on that and based on the fact that we already knew a Fed pivot and a Fed pullback from whatever terminal rate they got to on the Fed funds rate was happening in 2023. I think that the current state of affairs just makes it happen sooner. Even if they do 20 to 25 basis points on this March 22nd meeting, I think the next one might be a pause, come back, right? I don't have it to pull up right now, but the chart that I looked at that kind of forecasted 2023 Fed funds rate, that terminal rate, showed 1 or 2 clicks up into May of 23 and then click down to where that Fed funds rate, which currently sits at about 4.5, even if it goes to 5, gets down in the mid 3s by the end of the year. This is all stuff that points to interest rates coming down. Now that we've got that out of the way, hopefully my little brain and my little understanding of that was able to translate it in relatively layman's terms, why I think mortgage rates are headed downwards for the rest of 2023. Whether it's a straight line or whether it's jagged, I believe that rates head downwards in 2023. Everyone wants to put a number to it, so let's just call it towards 5% by the end of the year. Does that mean you're going to see 5.5? 2/3 of the way between now and then, and you're going to see 6% 1/3 of the way? No, it doesn't happen like that. It doesn't go in a straight line, but over time, trickle down 5% to 5.25 by the end of 23. That's my call. Like it, love it, hate it, disagree, agree, all good. Leave your comments down below. That's the call. And how is that going to affect real estate is really the $1 million question. Real estate's local, so all markets are going to behave differently. But here's my belief that with interest rates coming down, that's going to create a floor for real estate. And we all know that there's affordability issues in real estate as a whole. Real estate needs to get cheaper from a monthly payment perspective for the average person to be able to afford an average home in an average market. And so with interest rates being high and home prices being high, something's got to give. Agree, right? And so I think I've got a big pool of people that agree with me so far. Now, if I look at my market, we're probably 15% off the peaks we saw, call it April or May of 22. Home prices and the median prices actually come down 15%. When interest rates go down, a little bit of demand comes back. Some of that affordability continues to ease. I think this creates a floor where anybody who thinks that real estate has another 15, 20% decline to go, I just don't see it, because demand comes in and creates that floor. And there's just not enough inventory, enough real estate out there to create a big supply expansion. And so we are going to see real estate in most markets remain expensive, unfortunately. And, there might be some markets that see a 5 or 10% decrease in 2023, but with interest rates coming down and home prices already down 10 or 15% in a lot of markets from their peak, I think that for the most part, real estate remains flat, which I know isn't the answer people want to hear. So they're going to go out and seek the answer that they want to hear, which is real estate will be on sale. It'll be 30% cheaper, which unfortunately just will not be the case. I'm sorry. As much as I'd love to, give you stuff you want to hear, because truth be told, it does better for the YouTube algorithm. I could make videos on real estate crashing by 40 or 50%, and I could get tens of thousands of views and all kinds of ad revenue. But instead, I'm just telling you what I truly feel. Real estate fairly flat, mortgage interest rates down at the entry level, still tough for buyers because there's just not enough housing inventory to choose from. And so as demand comes back and interest rates come down, they're competing for those entry level homes in most markets. So that's my 2 cents. Let me know how you feel. If you want to connect with me and my team, if you're looking to get pre-approved or want to run a refinance scenario, we're more than happy to help. greatmortgagebroker.com. Go fill out the form. We'll be in touch. If you want other mortgage videos, I think we're up to 800.